China has been seen as the economy to save all others. It has been hailed as a country with unprecedented growth which is claimed by many to last forever. They have gone to lengths never before seen with the world's largest public works projects. How can this continue? You came here for the truth, so let me unveil that for you. Today we're going to look at China's $32 trillion problem. So let's begin. What are we talking about here? Stocks? Bonds? Well, let's cover it right away. This chart is discussing the figures from the People's Bank of China, where we are looking at off-balance sheet business that takes place in China. And the numbers are staggering. The numbers are huge. In fact, they've increased dramatically over the past 2 years to lengths they have never seen before. Looking at the actual document on the People's Bank of China's own website, you'll see the numbers for yourself. Beginning basically right at the top right there. Total liabilities amounted to 215 trillion yuan. That's an increase year over year of 16%. And even the year before was even more dramatic. So in the past 2 years, the amount of these liabilities have been increasing at such a rapid rate. And so there's more in the document, but let me just take it for what it is, right? I ran this through the currency converter, and you're looking at a $32 trillion US problem, because that's what liabilities are. Some would disagree, but take, for instance, the GDP. Find me a nation that has a GDP that can sustain this type of debt, these type of liabilities. But you don't have to, because it's off the balance sheet. It's off the books. That's where I see all of these countries doing the same thing. They put everything off balance sheet. Whether it's in the US, you got your Social Security, Medicare, Medicaid, you got Fannie Mae and Freddie Mac. Everything's just off balance sheet. Don't worry about it. That doesn't count. That doesn't count. Don't worry. How is that possible? How can they just keep it off the balance sheet? It doesn't make any sense. How much debt is the country in? Well, we don't really know. That's the point. And if you don't think that debt is a problem, well, just look at what happens with Detroit. Look at what happens with Greece. Better example. Greece is in a maximum amount of debt, and you say there's no problem with that, right? Well, look at what they had to do. All of their islands, their precious islands, are being sold off to the highest bidder, and those prices, of course, are very low. The Emir of Qatar buying islands for each one of his 24 children. He's looking, trying to get their best islands for those children. You can see that they are selling off all of their infrastructure. And the same thing is happening in the US as well. I've covered that here on the channel. Debt is a problem. Even though it is a figment of the central banker's imagination, they're still going to use it to take away what we have. That's the way this works. You have to understand that. They designed this system. They own the monetary system. They own all the central banks. They control it all. So if you think that the debt doesn't matter, maybe just because it's in somebody's imagination doesn't mean they're not going to use it against you. All right? So that's the debt that they are holding right now. I think that this is a problem. They've got major public works projects. And I will say, as I always say, every single time I talk about China, does this mean that they're not going to grow into the future? Well, they're obviously going to grow if things continue the way they are. More people will be moving from the rural areas into the cities. They'll be spending more money. They'll have to buy things. They're not going to be able to be self-sufficient living on a farm somewhere. And that's the way it is. But are they going to have some hard times? Of course. Of course they will. Does that mean that the West is in a better position for the future? Not really. I do see that, perhaps there will be some changes, that China will gain more power. Look at what's happened with the IMF. They're being included in the basket, right? They have more power globally. They're starting up the AIIB. They have the different, with the BRIC nations, they are developing sort of new alliances. And that's expanding. It's going to take a long time, but that is expanding. So I'll just say that because I always get some hateful comments about this every time. All right, moving on. Visualizing the real test for bulls in one chart. All right, what we are looking at here is something that I know I'll be criticized for, but I'll just say it anyway. The SPY VIX ratio. Okay, so what we're looking at is basically, think of this like the S&P 500 versus the VIX. Okay, and every time we have seen this happening, similar instances 3 times over. What we'll see here 3 times over the course of the past 20 years, and now more, in fact. Every time this occurs, we get a real decline afterwards. And in particular, let's take the financial crisis, okay? So it's looking to be the same thing right now. We are headed in the exact, you could see the line that they've drawn here. And will we get to the same territory? I don't know. I mean, they could break free from it and go higher, that's for sure. However, based on this ratio alone, it's due for a decline. So we'll see. We'll see what that is. I mean, the S&P has grown dramatically nominally. If you factor in for inflation, it hasn't really done that well since the year 2000. But just looking at it nominally, of course, it has grown significantly. And when you break it apart into individual stocks, you get a different picture. Of course, I've covered this here consistently over the course of the thing. I understand that you own Amazon stock. I understand that you own Apple stock, and you've done very well. However, the market as a whole, it hasn't done as well. So let's just go into this further. Another chart showing you this S&P 500 PE to the VIX ratio. Once again, going back into levels not seen since 1994. All right, so this is something, again, showing you that it is in danger territory. Okay, it's very important to understand where we have been historically to be able to predict what's going to happen in the future. Does that mean that it's going to happen? No, it just means that we are now at a point that we weren't since 1994, and you're seeing all of these different statistics add up, and it's not looking very good. This right here, 2017 S&P and the 1987 S&P. So it says you are here. Potentially a drop. I don't think that it's going to drop, and it won't drop 20% down in one day. I don't see that happening because the plunge protection team will be there to save the day, and also the fact that they will simply halt trading. However, we could start to see declines. That is a fact. And I do believe, which is something that I mention all the time, but some people ignore it. What I will say is that a lot of people believe that there is the financial markets, stock markets, bond markets, everything else out there. And these are owned and controlled by the technocrats, right? And they believe that, okay? They understand that. But they believe that if the markets go down, somehow they lose control of it. And I don't agree with that. I think that they do controlled collapses. And they do this on purpose to consolidate power. They shake out all the weak investors, and they are able to buy up assets for the cheap. They know when the bailouts are coming. They know when the bail-ins are coming. They know when it's time to buy in. And so they do that. They get sweetheart deals like Warren Buffett. Now you and I, we don't get those deals. So they know when the time is right. They can consolidate power, and it's a perfect opportunity to have bankruptcies, mergers and acquisitions to once again consolidate power. And they do this every single time. Nobody seems to notice. They think, oh wow, they really rescued them. Good for them. No, that was done on purpose. They want the assets that they have. They want the business that they have. And most importantly, they want fewer hands controlling more things. So that's my talk about that. Something I cover all the time, but seems to be ignored in the hateful comments. G3 central bank balance sheet, we are looking at a time in which this has increased dramatically, and now just recently this has declined. So we're going to have to see what happens with this, because I do see this as a real deflation that occurs, not with the balance sheets necessarily, but a real deflation, and then we will see central bank hyperinflation. That's what is the most likely scenario. I don't know if that's going to happen, but that is the most likely scenario just based on, looking at the history of it all. G3 central bank balance sheet and the S&P 500. there is no doubt in my mind that these are correlated completely. I mean, it's only showing you 2017 here, but take this back years and you'll see that this has been in lockstep. It has been in sync with each other. The S&P 500 has been directly correlated with the performance of the G3 central bank balance sheet for a very long period of time. And should they cut back on that, who's going to buy the shares? Because it's only really central banking that has been pushing it up to this level. So if they start cutting back, you're not going to have real investors coming in to buy up the amount that they intend on selling here. There's no way. The central banks are the ones who have been doing this. And there's just one more. The Bank of America ML Corporate Master Index, lowest since July 2007, yet another indicator. Looking at this here, in addition to the two videos I just have done, you're seeing this here, more of the revolving door, and you're looking at people like Rahm Emanuel, Neil Kashkari, all these people that were involved in the financial crisis are yet again doing the same things. They are involved in one way, shape, or form with the government and with big business, all in a revolving door. Many names here to check out. And last but not least, I thought this was pretty interesting here. Mapping the evolution of new technologies, absolute share price performance for each sector indexed to the maximum levels. This is globally. And you're seeing different things here. You're seeing LCD, wind, solar, 3D, LED, and batteries. What's important to know with any technology is that as the popularity increases, it isn't necessarily that prices will continue to rise in it. It's not the way it works, particularly with computers, technology, that you will see sometimes a deflation because things become cheaper to produce. And you could see that with televisions, for example. You'll see that all the time when a new technology, whether it's 3D TVs or something, and all of a sudden it's an included feature at no extra cost. That type of thing is deflationary and perhaps beneficial to the consumer, but it is deflationary in terms of its price. So you have to understand that there needs to be new research and new development coming out always consistently, and so that company can continue to do well. They can't just have 3D because maybe something else will exist tomorrow. So that's just what I found interesting. LCDs, wind and solar back around the financial crisis time, and then moving on to today, we see things like LED and batteries becoming more pervasive. So this is just something that I thought would be interesting to show you. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it pushes these videos higher up into the YouTube search rankings. So if you want to support this channel, all you have to do is give me a thumbs up. And of course, if you comment down below, I comment to as many people as I possibly can. Everybody knows that I do reply to the comments on here as much as I can do so. But if you email me directly, I will definitely reply to you. It takes me a long time to get back to emails, but I assure you I will get back to you. So, of course, you can do that at david@themoneygps.com. And last but not least, if you found this video informative, I know you will find my books, The Money GPS and my newer release, Global Economic Collapse, even more informative. You can look at this here at Amazon. The links are in the description below. Take care.